Welcome to Trading Lounge and the US indices for the 4th of June, and starting with the S&P, this is basically the daily chart here, just looking at the bigger picture. I know a lot of folks are not that keen on having sort of wave one here, but I want to justify that why I'm here on this, because if I look at Goldman Sachs here on the daily chart, we can clearly see that from here to here there's 5 waves in, and that takes us into the early June period here as well for that. So 1 and 2 here, and probably 3 to here with an A and a B. Well, looks a bit dodgy, but wave 4 in through here, and then a nice 5 wave structure for wave 1 here. So that's partly the reason I've got that sitting on that space, in that place rather. And so up in this little area through here, I know this can be changed, adjusted, or counted differently rather. So from this low here of wave 4, we can look at this as wave 1 and 2 here, and obviously we've got a nice 3rd wave here, haven't we? So we haven't really had the 4th wave yet. Well, I mean, this can be well, 1 and 2 and 3 and an A and a B and a C for wave 4, or wave 4 could be sitting here. So this is what we've been trying to figure out, is is that wave 4 sitting here, or do we have an A wave, a B wave and a C wave down here for wave 4 and then push up? So on the intraday, just explaining that a little bit further, is having wave 3 up here with an A wave here, then an A and a B and a C wave over to here, and then moving down from this point. This can be lifted up 1 degree of structure as well, so this could be blue wave 3 and blue wave 4 here as such. So I think it's like, not this one, that's the bullish count, we can come back to that. This one here, so it can be lifted up 1 degree of structure. So if this count is wrong, for instance, and this wave 4 is actually sitting over here, then I know this has been a little bit messy up through here, but this would be the point at the long trade coming in here, because we've got 3 waves here. So taking out this top or the next lower top in here would suffice, and it would make that, force that to be 3 waves. So if we were looking for bullish counts, we could look at it like this, with wave 4 being in here, and then we have to look at this as wave 1. But on the cash market, it's just doesn't sort of fit right as such. And then we could look at this here as wave 3 and 4 in here, because this little move, this little yeah, as I mentioned, this little move down through here is in 3 waves. So we obviously talked about this yesterday. So we can look at taking out these highs, or at least this high here. If I drill into that a little bit further into the hourly chart, we're also talking about it here yesterday as well. So we have a top here of wave B, that's where it needs to go. And yeah, so currently this move down through here that we'll count a little ABC here. So yesterday we were looking for this to move down into group 2 here. So we know that's within inside the swing range of 4,200. So the top of group 1 here, 1, 2 and 3, and then down here for this. So that's just the normal swing range. If the market starts to trade outside of that, or especially if there's support on top of group 1 here, on top of the 30, then the market will be moving to the upside. It will be pulled up to 50 and sort of severed from any pull coming back at the 200 here, and much the same down here as well with group 2. So yeah, look, this can be counted as an ABC correction, but that wouldn't be confirmed until we, in fact, we'll just move that out of the way, until this high here goes out. As simple as that. So that B wave, because then it would confirm that this is in 3 waves. Otherwise, this move up here, retesting the 4-2, it looks like it's in 3 waves. So let's just go to the tick chart. So we can see here that we've got, well, from the top here, we've got an impulse wave down, and then we've got a corrective wave back up, and then we've got 1 and 2 and 3 and 4 and 5 here. So it can be a C wave here, but it also could be down for wave 1, back for 2, and then down for 1 of a smaller degree. And here you can see that we've only got, well, 3 waves here. So as long as the market stays, we'll just talk about this for a bit, as long as the market stays above that point, that top of wave 1 here, so we don't want wave 4 overlapping. So if this moves up here, let's just say that it humored me for a moment, then we would be seeing 5 waves up here, up here, so 1 and 2 and 3 and 4 here and 5 here. So if we get 5 waves in the opposite direction of the trend coming down here, well, then we're going to get a correction here of an ABC pattern, probably pulling back in here to where support is, and then getting another 5 waves up here. And that would also deliver a classic trading levels pattern at that point there as well. So we can go long from that point. So you've got to get that first. If this moves down through here, taking this low out here, well, then you know that we're in for a bigger bearish picture, and we'll need to start looking at this as 1 and 2 and 1 and 2 here, and going down for a 3rd wave at that point. So you could short this in a number of ways. Of course, you could obviously short it under here, because that would trigger it at that point. If it starts to overlap this here and drops down through here, then you'll know that it's overlapping. And at that point would be quite interesting, because we'd be working with the, well, group 2 here, the 65, 72 and 80 here. So but what would happen down here, of course, is that the market would come down through here, and then it would bounce off the 80, because that's where the support is. So you could also look to short through here, but particularly under this first low here as an ABC pattern at that point. And then you can look to add 172, and 4172 becomes a retested resistance, not when it just comes straight through. It's got to come through it, retest it and drop again at that point. And the same with the 65 as well. You can look to add those positions. If the market moves up, well, then the normal thing is to try to build on the 200, the closest largest number, and then onto 10, 20 and 30 as they become the tested supports. It's just one way. It's not the only way, of course, but it's just a practical solution to the problem of moving in at the beginning of the trend. Okay, so that's kind of it really for the S&P. So it's all sort of now boiled down to this particular pattern on the tick chart, and we just got to see which way the cards fall. So just to recap this, this is pretty much what we're looking at here, unless we get this top here, that top there breached, then we can look to the upside at that point. And you know that you can come in lower as well from that point now on the tick chart. And you also know too that on the short side you can short this low, but you also know that you can move closer to that as well. So the NASDAQ's the same. We've been talking about the bearish count here based on the 5 waves coming down through here for this. But there's also a bullish case for this as well. But I just wanted to point out on the bullish side of things, well, first of all, you can go long above here, because that would be in 3 waves from this high. And this 13,300 would be a place to take some profits if you were going to short, because we talked about going short if the 500 became the retested resistance. So we've had that spike down there, but then it recovered and moved back up. So you'll need to look for the same thing again. But in a nutshell, you could short under here. You can definitely expect a bounce off number 3 here. So you definitely, well, if you don't have to do anything really, but taking some profit on the 3 here would be, well, this is where the market could change. If the market came down through here, it's at the 61.8%. The market could reverse. That's the crux of the matter. So you'd need to think about locking some in here, so at least you get the whole trade to break even at that point. Okay, let's have a look at the Russell, because we've been looking at the Russell as a bullish count, and that's okay too. So looking at it as wave 3 over here. I know wave 3 can sit on here as well, but you know, just counts better like this. So yeah, we're looking for 5 waves up. So we've seen a bit of a sell-off at 2.3. That would just be normal to see a reaction at that level. So we'd be looking for the first high next for this. So look, really, as long as this market stays, if it's a wave 4 here, we really want it to stay above the wave 1 here at that point. So at this stage, currently, this would be in 3 waves. So it can be corrective part of all of this. And the mistake that I could have made is having wave 3 over here where the B wave is, and then that would give us an extra wave. That would give us a wave down here as an E wave here. Before heading higher at that point there. We've only got half a position on here. You may want to sort of protect that a little bit more than what we've got here for this by taking some money off the table here. Yeah, so that's where that is at the moment, or you just sort of hold through it. But depending if you're trading futures, of course, you can't really do that with leverage. Okay, let's have a look at stock. So starting with Tesla, as you may know, this week we've been looking for this rally to top out here, and we could see that on the stochastics of the daily chart here that it was running up really quite fast, you know, compared to the whole trend. So from this top here, that moved down here, from here that moved down through to here. So that was it is what it is. It's equals 1, but then this shorter move up here in shorter time moved right back up so quickly. So that's a real sign that it is a divergence coming into the market. So that's all played out well. So now we need to understand this a little more. As I've mentioned before, it's possible to have a more complicated correction here. I hope it's just as simple as going from wave B to wave C here of wave 4, and yeah, an A and a B and a C here. But I know that from these lows over here, it's possible to have well, the A wave to here, then a smaller A, B wave here, and a C wave over here to make a B wave over here. Probably not the case, but it just means I always just like to be cautious when we're in something. You think it's just going to go well, and then it does something completely different and throws you out. So that's why it's important to look at both sides of the coin. Let's go to the tick chart and see how our smaller trend has updated here. So if I call this wave 4 up here, then I've started to count down here as wave, well, started to count down, so from the top. So that's what we've done as 1 and 2, and 1 and 2 here, and we were looking at wave 3 here, and 4 here for this, and down for wave 5 here for this. So we just need a bit of a cleanup here from the night before. It's a little bit messy, and didn't really go according to plan, but we're looking for that wave 4 and then down here for this. Now, this is we talked about taking a percentage at this point for this, so because we should expect a bit of a bounce here for this now. So yeah, 1 and 2 here, and all the way down to 3, 4, and 5 here. We may just be continuing to cascade down here, but the idea was to take some at 580. So if you've done that, that's good. I'll just put that out the way here for that. That was our 61.8% area, and also counting down our 5 waves here. The wave 5 here has extended down, but I can see we've got 1, 2, V3 in here, 4, 5. So we're pretty much going to be in group 2 for a bounce here. So in this case, we could look probably another low to come in there. Don't need this. We could use this, so that goes there. I'll leave it on the 600. So it is possible for this to have some sort of retest into this space and move down again from this point, because we could look at this here now as wave 1 and wave 2. I mean, it looks bearish, doesn't it? You'd think it would just continue to cascade down. And look, that may be the case, and I can have it wrong. But if it does start to rise, then it's good, to understand what the possibilities are. So anyway, that is that, and would be looking for the A wave first in here. So a little A, B, and C. Yeah, so that's where that is. So yeah, if you want to continue down here, we'll just leave the stop out of the way. Just checking to see if it can be counted in another way, but that's okay. We'll also try to look to short it through here. You could just sell it at the 600, because that's where it will probably fail from if it rallies. But otherwise, we'll work out the safe trade, the safe short trade within this space as well. Okay, so let's move on with Facebook here from wave 4 to wave 5. We're looking for 5 waves within this sequence here, and we can kind of see that we've got wave 1 and 2 here, and it looks like we're going in for 3, 4, and 5 to the upside. So yeah, we need to bring that back down here a little bit. This one is wave 4, and then looking for wave 5 to the upside. So on the tick chart, we'll look like this. So from wave 4 here, we'll need to label this 1 and 2, and wave 3 up here, and wave 4, and then wave 5 moving here. So we had a trade in here. We've been stopped out here because I had the wrong degree of structure. In here I had the wrong wave 3, so I didn't think it would pull back that far, but there we go. Apologies about that. Yesterday we talked about being long again above the 330. That's okay as well. We need to look at this here as the corrective move, which appears to be corrective, I believe. And wave C here for that. I mean, the first leg here is quite interesting because we could look at that as wave A here, a B wave here, and then I think this is better suited to 5 waves in here, even though we've got a spike in this little move here, rather than 1, 2, 3, 4, and 5. It doesn't really fit that well. And the good thing about this is that if that's correct, if that is the A wave is 3 waves, then we know that it's bullish corrective. So that means whatever happens here is part of that wave A here and part of the correction. So in this instance, it looks like with our next move down here is that we could look at this as 5 waves here. That's sort of suitable as 1, 2, 3, 4, 5 here for 1 and back for 2 here, and then down for 3 here. Now wave 4 does overlap wave 1 a little bit, but I think at this degree of structure we could forgive that. And this is probably the end of the correction here with 1 here and 2 here. So we probably look for wave 3 that will come in near the lows there, and wave 4 and wave 5 here to finish that off, and then start building from that point. Now of course with this ABC correction here for this, or no, that might even be it there actually. I'll use that top rather than that one. Oh well, look, if it does move down, you know where we are with that anyway for that. So that means that this is the top of group 1 here. If we use the closest largest number, which will be 25, so let's just say that the market does drop down here for a moment, then you could look for a classic trading levels pattern sitting here for this. So all you really need to wait for is the first high above the level, and then you can bring that in at that point. So I'll leave that there. I mean, obviously, you know, we could have made a mistake and it goes down further, but let's just also look at the 38.2% retracement level here for this. Well, that's interesting because that comes in, you know, right on our little low here. So that matches up quite nicely with that. Anyway, you'll find your own way, but we're thinking this is wave 4 here, and ready to move up based on, we kind of have made a new high above the previous high over here, but we only have 3 waves up. So it's logical to think that we'll be going up further from that point. Okay, let's move along. Square. So as you may recall, we've been looking at this as an ABC correction. So from here, we've been looking at an A wave, a B wave, and a C wave down to this point or down to this point here. And this one here looks logical when you look at from the top here as wave 1 and 2 here. And this is like all the same sequence here. So wave 3 here, then going back for wave 4. It went above our target area, but it never really found support on that target area, that 220, and it's fading from this point. So this one here looks like it's correct. Based on this one here as well, we're also looking to go long because we didn't want to miss it. So we had our sort of safe trade in on top of one of these bars or close to it in there, so on the tick chart. So we were counting this up here in a positive manner and looking to go long above here, or understanding this is the ABC correction and we'll be moving down further. So it does appear that this one here is more correct. So let's just go in and check on that. So yeah, yesterday when we were talking, we were looking at the move up here as wave 4 or possible wave 3. Now, if it's going to be a wave 4, then we would have to look at it as wave 1 here and 2 here rather than A, B and C for 4. So 1 and 2 here and then going up for 3 here, and we're looking for wave 4 here, and the 38.2% retracement level is just sort of where those labelings are, so to speak. So it's moved through that quite a lot, and I can see that it needs to move through a little bit further. It's possible here that we could put wave C down here as wave 4 down here, but there's still more to come here because I can see that this is, well, down from the top, our B wave here, we're going to go long here. So we don't need that now. That kept us safe going that way. But here we've got wave 1 and 2 here. And then I think this is 1, 2, 3, 4, 5 here. So this would still need wave 4 to come back and wave 5 to come down here to finish off if that was a wave 4. And that's quite a bit lower than the 38.2% retracement level through here somewhere. So this is also starting to look like a third wave down through here as well. So we don't need these over here, so we can use these to start counting over here. I think I've got to put them over this side on the tick chart now. Okay, so that's kind of where we're at here at the moment with this. So that will bring us back down here somewhere. That might come down further here. Just doesn't look quite finished. It only looks like it's in 3 waves, but yeah, not to matter. So basically, in a nutshell, if we go back to our daily chart, that means that we should be able to buy somewhere down around the 180 here. And that's kind of what we were really trying to work out. It's not that we're going to buy on the low here either. We will track the 5 waves down, and then we'll need to look for evidence that we can that's building to the upside, because we really know the point is that the reason we wait for the evidence also to move to the upside is about our managing our risk, our exposure, our stop loss. Where do we put the stop loss? So we need a structure that's you know, confident enough that, like an impulse wave, that's given us that direction, and then we can work the stop loss based on that impulse wave. So that's the reason why we do it, rather than not just buying on the turn, because, you know, we don't always get it right, saying, oh, okay, that's the low. Sometimes it works out and you're a genius, but other times you do it and you've got sort of egg on your face. So it's just good to move with caution. Okay, let's move along. With Apple here, as you may know, we've been looking at Apple from the top here with 5 waves down through here, and we've worked our ABC pattern, which was rather high, and then we've started to work this move down through here. Now, I understood that this was impulsive. Now, the market could, from this low here, move back to its box here, the 50-60% retracement level. It still could do that, I guess, but it's looking a little bit, you know, thinner on the ground all the time. In fact, we've just been sort of triggered in on the short side. So let's go in and have a closer look at that on the tick chart. So from the top here, it counted sort of 5 waves down, and we're looking for some sort of rally that never really got back to our box up here. But at the same time, I mean, it still could. We need to be mindful of that, but it's more likely now that it's heading lower. So we need to understand that a bit more. We know that the move from the low here up to here was in 3 waves. There's an A and a B and a C, and that was clear as day. So that meant whatever happened over here would be part of that corrective pattern. Now, I may have this counted wrong down here as well, because of this, because of all of this. It may even be a wave 4 here. So these are the things we'll have to check on a bit. So I'll just put that there for a moment, but I'll just dull it out. Just remind me to check, double check everything. So yeah, we understood that it was corrective. We also understood too that normally if this low, I mean, this is in 3 waves, so that means that this low will be taken out. Will it be taken out here, or do we get another bounce back up here, or do we get a smaller bounce here? So from this top here, I've been counting down here for this, and I've counted as 1 and 2 here, as you know, and then we've pulled this apart here, and I've got wave 3 here and 4 here, and then I was looking for wave 5 to come down through here. So I may have made a mistake in here. We got this spike here as well for that, so I had to be a bit philosophical about that. Yesterday we were looking for a rally to move back a little bit higher here for that. That didn't occur. So this is a sort of, I scratch my head. Is that actually wave 1 there? Or have I made a mistake somewhere in this trend here that we'll be looking for wave 1 here and wave 2 over here coming back up? So from the 123 area here, that 123, where we can expect a bounce, because when we're talking about the trading levels, we'd be looking at between 20 and 30, which is the minor levels, and then we've got the sub levels that come into play, and the sub levels are, well, 21, 2, so 1, 2, 3, 5, and 8, and then group 2 makes up that 8. So it breaks it down nicely into, into 3 lots. So group 1, the midpoint, and group 2. So there's certain things we know about these numbers. So it's likely that we normally get a bounce off once we get to number 3 here, the top of group 1. So we can kind of expect that. Then I'll look at the structure here, and should I go, well, I can see 5 waves in this move here. So should I really put this wave 2 here, and should it be a wave 2? Should it be a wave 4? And is that the low here, or do we have one more low to come into play here for this, and then have a bounce and then come down? And I'm talking about this coming back to the 50-60% mark here to manage the stop basically for this. So we really need to keep the stop out of the way for the moment. That might be too far. I mean, obviously the closer the better. Let's just go back to the bigger picture here and see what's at stake. Okay, so let's just clean this up for a second. So we're talking about copying that here as wave 1 and copying that there as wave 2. And wave 3 will probably be down here somewhere at these lows. The market's going to struggle at the 120 there. So we need to be mindful of that. But yeah, so really what we're talking about here, we've got a short trade in here, and we're talking about having it, so it's not too bad, is it, in that relation? We just wanted to keep it out of the way of the 61.8% from that top down to 123, which is there. So we're really just keeping the stop out of the way here somewhere for that, just above the 61.8%. So I think that that's fine, really, in the scale of things. So that risk here to the reward really sort of, does its job. Anyway, that's what we're looking at. Let's see if we're on our way. We'll manage the stop from the chart end. I won't leave that there. We'll just keep it as clean as possible. Alrighty, let's move on. So Google is the next one here, and markets are looking a bit bearish. So our B wave here may come into play for this. So we'll see how that goes. We don't have a trade in here for this, so it doesn't really sort of concern me that much. But as I pointed out, this 1, 2, and 1, 2, 3, 4, 5 for the third wave here can be the B wave sitting here. And now that that's dropped there, but that's okay. It hasn't dropped too far. If it drops through the top of wave 1 here, then you know that the B wave is in play, and we'll need to bring that back into play here and turn it green, lift it up one sort of level and give it a bit of equality. But we weren't interested in really trading this either here. I mean, even if it does move up, it will just move up the length of wave 1 here. That's why we never really bothered with it. The risk and the reward wasn't really there for that. So anyway, let's just see how that plays out. Nothing much I can do about that. And Amazon for the last one. So with Amazon here, we understood that the move down through here would repeat itself. So we can look at this move here and copy that. And we're figuring that it would come back to the box here, or at least giving it a chance to do that. But it's certainly struggling at the moment, as you can see on this last bar here. So it may be like the other stocks and just drop from here. I mean, of course, technically from this low here, that would be it. But we could also do it from this low here as well. So we could look to short through there. Now, of course, when we go to do that, it will probably rally and then drop through. So we'll need to understand that a little bit better, and yeah, how to accommodate that sort of risk. But in a nutshell, that's what we're looking at. So we're looking at a move to come lower. Yeah, I'm thinking also down at the minor level here at 2.8, maybe. But there's a lot to get through here, of course. All of this support here for this is going to play out. Let's just go to the tick chart and try to understand it a bit better. So we'll need to make some adjustments, but we can do that here together. So I'd always known that from this low here, we'd counted 5 waves up here. So we know that we had this as wave A and then a B and a C wave here. Now that's okay. We weren't quite getting to where our target was at this point. But it was quite close, but not sort of there. So I thought, oh, well, it could sort of push up, and it could probably still do that. So that's why we need to be a little bit sort of careful. But I do think that we need to start changing things around a little bit. So this trend line through the bottom here could be the low for this as a wave C of B here, and then push up for wave C of B over here. So that's still sort of on the cards, so to speak. But at the same time, we need to try to sort of understand this trend here. I mean, yeah, and but I'm sort of thinking that we'll see some sort of rally here for this, because each trend needs a correction before moving down here further. That's what I'm thinking. So that means that this wave B here can be in place, and that means that we'll need to move these around a little bit. So I'll just do that while we're here. The A wave, the B wave, and the C wave here a little bit small. So we just need to be a bit mindful of it. So this is 100 ticks. I'm just going to go to my 20 tick chart where I've done some work on this here before. So yeah, looking at it like this here could also be wave 2 here, by the way. So I'll just put that in there. It's possible, but I don't want to get you too excited. So then, if we looked at this as the A, the B, and the C wave up here for wave B, then we can look at this as wave 1 here with an A and a B and a C wave here for wave 2. And then we'd be looking down here as, well, moving into wave 3, but we'll be looking for 5 waves. So wave 1 and 2 here, and this being the third wave coming down here and the fourth wave, and we'll be looking for, you know, these 5 waves in this section here. So yeah, wave 4 and then down for wave 5 here. So that's how I'm sort of thinking of it. And well, I always like to use the number 2 here to go with. This is a major level here of 3,000, and then 1, 2, and 3 are minor levels. So once we've had a correction and the market's moved back above the 2 up into the 3 area, and then if it comes down and finds the 2 as the resistance, then it should be pulled back down to the closest largest number down here further. So yeah, what else can I say about this? Oh, the other point too, I guess, is that now that this has moved down below this move here, then it also helps it be bearish as well, because even if we were looking at it being bullish as, say, 1 up for 1 and back for 2, up for 1 and back for 2, and then it's taken the low out here, well, then that's destroyed that count. So yeah, so what we really need to do is to try to figure out what this trend is here for this, and this is what what I haven't done just yet for this. Could probably count it the other way around. 5 waves here, then 1, 2, 3, 4, 5 here for that. But I mean, that makes such a nice 4th wave there. So I mean, it's sort of like this really. I'm just not quite sure, and I don't know if that should go there or should go there. And that's 1 and 2 and 3 and 4 and 5 here. That's not finished off. That still needs to come down here a little bit further. Perhaps just sort of wait for this low to come in here first. So you won't know the low's in until the market gets back above the 3.2. So that's what we could do at this point. Because we want this wave 2 here to begin, basically in an ABC pattern. And we'd like it to be, you know, 50, 60%, which brings it back up into this space. Doesn't have to move that far back up. All of this consolidation area through here would be ripe for stopping the market moving up at that point. Yeah, okay, so I mean, normally we could look to short it just under this low here for that, but I'm just wondering if that's going to get us trapped at this point. It's not like big enough. So yeah, I don't know. I think just wait, even if there is another low down here, it's, you know, don't go short. You know, what we're looking for is we're looking for that retest. This trend here really hasn't been corrected at this point, so that's what we need to look at. So I'm not sure how far this comes down, but we want some sort of rally. We want some classic trading levels pattern sitting on that 3,200. So it could be something very simple like this, just a little bit bigger than what we've got at the moment, or it could pull back up a bit higher. So this is the one I'm looking for, because we're looking for wave 1 here and ABC for wave 2 here. So you can get in over here again, but this low, that low there, that low there, they're all entry points. Okay, so I'll leave it at that because the video's too long, but yeah, that's what we can look at. Alrighty, thanks for tuning in. Cheers.